Hello and welcome to the Power of Passive Investing series. We have a very interesting guest today, Fabio Bari. Fabio, welcome. We're excited to have you.
Thank you, Lena. Excited to be here.
Thanks so much. And we are very excited because Fabio has a number of different experiences in real estate and beyond. And we're very excited to hear Fabio's story and to interview him today. Fabio, why don't you share with our listeners a little bit about yourself and your experience?
Sure. So I've been investing in real estate since 2014. That was the first commercial property I bought with my two brothers-in-law. And shortly after that, we purchased a two-family in the same town in North Jersey. And then we all three of us were working W-2 jobs at that point, and kind of took a bit of a pause. Kids started popping up. And then in 2017, 2018, I started to, I had left my W-2 at that point and was full-time in my own clothing line. And my dad had a couple of properties that he purchased many years ago, and he was just getting older, and it was kind of the right point for me to step in and help him out with that. And he completed, I tried to help him complete two 1031s for two properties that he owned that were just a bit more challenging to manage at that point. And that whole process kind of spurred me into really trying to understand what commercial real estate investing was, and looking at different asset classes and understanding different underwriting models and management. Started looking at estate. So kind of going from your typical mom and pop only investing in smaller properties in my backyard to really like kind of looking at everything in multiple different asset classes. And I was able to help my dad complete one 1031 on a mixed use property also in North Jersey. We really looked at a lot of different properties all over the country, but kind of ended up just primarily investing in New Jersey, where I live. My dad's in New York. And one of the properties, with the proceeds from one of the sales, we ended up purchasing a mobile home park in 2021. And that kind of got us, I purchased that park on my own. And then my two brothers-in-law, I explained the asset class to them, and they saw what I had done. That got them excited for that business as well. And from 2021 to now, we're now getting ready to close on our sixth mobile home park. So it's six parks in just a few years. And they've been a kind of different range of stabilized to distressed and value add. So we've kind of got a lot of experience in different types of mobile home parks and different types of strategies that we've been able to execute. And most recently, we just got approvals for one of the parks that we purchased in 2022. We just got approvals to do an expansion on the park, take it from 24 to 34 pads.
Nice.
So about 50% increase in the total pads in the park. So we've kind of got a little bit of everything. And then in the middle of that, also became a general partner on the Surf Village, 9-unit short-term rental property in Bradley Beach. So have a little bit of exposure to everything ranging from commercial office to mixed use to mobile home parks and hospitality as well.
Amazing, amazing. Such a diverse experience. And Fabio, what was corporate life like to you? What did you do before becoming a full-time real estate investor?
It's quite a varied corporate life as well. So out of school, I was in financial services, and then quickly realized that wasn't for me, and then left to become a financial analyst or sales analyst at Luxottica. So working in the eyewear industry for a few years, and then I left to pursue my MBA in Milan, Italy, and that kind of helped me transition into the luxury fashion industry. And
Wow.
Spent a few years working for an Italian menswear brand called Zegna, and a brief stint at IWC, in the Richemont Group, and then I left to pursue my own clothing line for a little bit, and then quickly realized that fashion's a very tough business and hard to pay the bills when you have one plus kids. And luckily, the real estate kind of came to the forefront at the right time, and was able to do some flips and get. I also have my real estate license, so I've done a lot in the industry and have a lot of different experiences, and really fell in love with real estate and the opportunity that it creates. The way that you're always learning and growing, it's a really great industry.
Amazing. Wow, you have so many diverse experiences, starting with your W-2 into numerous ventures and then going full-time, becoming real estate investor and entrepreneur. Truly diverse, varied experience. I'm excited to dive into that. So when you first dived into the real estate investing, when you bought your first mobile home park, did you realize at that point that you wanted to leave your corporate life, or were you still continuing?
I was out of corporate life at that point, probably 4 years. So it was I kind of I usually jump first and figure out how to make the plane on the way down. So I kind of
Mhm.
did that with the closing business I was doing on the side for a few years before I left. After my first son was born, uh, I didn't have a good experience at IWC, and quickly realized that it wasn't going to be the right place for me to build a family and be the dad that I wanted to be. So I kind of left and pursued the clothing business and was able to get that to a certain point, and then started doing the real estate on the side with some flips and some other small investments on my own. And then when the opportunities came up with my dad and helping him with the 1031s, it gave us a little bit of capital to kind of jumpstart the portfolio and look at some bigger assets.
That's really amazing that your dad has served as a great example for you as to what real estate can do for you and your family, and um, gave you that kickstart. But aside from that, you're what a true entrepreneur is, having an open mind and trying different things, where you went to work at an eyewear company and quickly realized that wasn't for you. And at the same time, you were doing something on the side, like your clothing line, because you wanted to see if you can continue with that, not jumping fully into that, but doing it on the side, which what smart entrepreneurs do, especially the ones that have baby and a half, and maybe another one on the way. So that was very smart of you. But going back to your real estate journey, so you started after the crash, of course, but have you felt the consequences of the 2008, 2009 crash when you were buying your first mobile home park?
We were a little bit further out of it at that point. I mean, the only looking back, obviously hindsight's 2020, but uh, was much more conservative than I needed to be, considering kind of the timeline and the way things ran up, and uh, good lessons to learn as the more you stay in the industry, and the more years go by, and you see different cycles, and try to remember the lessons of the past and how to navigate them.
Very true. Completely agree with you. But after acquiring so many parks, I'm sure you've seen a lot of challenges through them. And you and I kind of touched upon one of your recent acquisitions from last year, where you took over the park last summer, and you mentioned there were some challenges with that park. So why don't you take our audience through that acquisition and share what kind of challenges you had and how did you guys overcome them?
Sure. So we picked up a smaller park in South Jersey last year in the summer. Off-market deal, direct to seller financing with very favorable terms. Because it was a pretty distressed park, about 60% occupied. Um, we're on well, water, and septic, and a lot of infill, a lot of infrastructure work that needed to be done. Needed to fully upgrade and update the well system. And in the process of kind of going through everything, ran into some headwinds with the township, kind of stopping us in our tracks, where we ended up kind of fast tracking our improvement plan. And when we were ready to start infilling and bringing in homes, the town stopped us. I guess the previous owner really had not been in communication with the town, and wanted to, once they found out all this work that we were doing, kind of stopped us in our tracks and wanted to see plans and surveys and all these different documents that we had to provide. And seemed there was a little bit of a backstory. This another large park in the same town was having issues with their tenants, and was creating some problems with the town. So they thought that maybe we were similar types of owners and just coming in there looking to make a quick buck. And we had the way we navigated that was really just to get a meeting in front of the planning and zoning officer and explain to them, what we were trying to do, and understand that there were some other things that kind of popped up from when the park was originally approved, to some work that the previous owner was going to do but never did. So we weren't aware of that, and it didn't come up in our due diligence process. Somehow it got missed. We had asked for it, but the town had never provided it when we did an open request. So we kind of worked with them, and a little bit of give and take, and we're able to get to an agreement where we're going back to the original layout of the park that was approved for in the 1970s, and we shifted it around a little bit, but they're on board with what we're trying to do, and understand that we're not, we're owners that look to improve the lives of the current residents, create safe, affordable environments for them that they can be proud of. And that's kind of been our business model with all our value add parks. And hopefully we're almost there, where we have the final okay from them to start bringing in new homes, and then we can start executing our business plan, and fill up the park hopefully in the next couple of years, and have a successful refi event.
Amazing. Yeah, that's a great story, and it's a story of perseverance, dedication, and true professionalism. Fabio, what would you say are your main lessons learned from that experience of buying that house and going in front of the planning board, and overcoming the obstacle that you initially didn't even know about?
Yeah, just patience. Not letting you get frustrated. Things aren't moving at the pace that you want. Takes a while for the township to respond. Took a while to get responses. There are smaller townships in these towns that we're dealing with, so they don't have a lot of support. So just kind of understanding where they're coming from, and not rushing it, not forcing it. Not being more open to working with them instead of trying to kind of force what we want. And you have two partners to kind of bounce ideas off each other. So we all kind of support each other to keep our heads cool, and get the right plans in place, and have the right conversations.
Amazing, love it. Now, I know you're a full-time entrepreneur and investor. Are your brothers-in-law also full-time entrepreneurs, or they?
They're still in their corporate jobs, but we brought on a couple years ago a manager to handle the parks. She's actually part-time with us, and supports us a huge deal. She's an amazing manager, and she's been tremendous to help us, help me step back, and this way we can all kind of stay in our lanes, and she helps keep the wheels turning.
Excellent, excellent. Your latest section reminded me of a book that I read a few months ago. It's called Who Not How, where you know that there's a lot of work that needs to be done, and instead of figuring out how to do it, you figure out who to bring to execute that work so that you can concentrate on what's most important, which is the vision, strategy, and long-term goals.
Right.
So
Exactly.
it's perfect. You said that she's a great employee. How did you find her? Because that's what a lot of people are missing, finding great employees. They don't know how to do that.
Yeah, it's been quite a blessing. She actually, the first park that my brothers-in-law acquired, um, she was the previous manager for that park. Um,
Mm-hmm.
the owner was not very organized. She kind of did everything for her, and she was pivotal in helping us actually get to the closing table with the documents she provided, and we kept in
Amazing.
touch with her. We've always tried to do the right thing by her. We even gave her a little cash bonus on the side after we closed that park because she helped
Wow.
out so much. And then it was probably a year and a half after closing on that park that um, we reached out to her and to see if she would be open to coming to help out us out. We knew that she knew the business, and we had after um, about 8 months after we acquired that first park, we purchased another two parks kind of back to back.
Mm-hmm.
Um, and I mean, I was being full time in real estate. I was doing a lot of the day to day management, and we helped transition her in to help us out, and it worked out where the timing made sense for her, and it worked out great for us. And since then, we've acquired another two parks, and she's been a great partner to have.
Excellent, excellent. Good for you. And I want to point out for our audience how important it is when you find good employees to also reward them, like Fabio mentioned, giving this property manager an extra bonus for her hard work and dedication. I think that's essential to show people how much you appreciate their work when they go above and beyond and do do good by you. So that was
Absolutely.
excellent move on your part. Um, Fabio, in terms of your strategy, you and your partners, your brothers, strategy, do you guys look for parks anywhere in the US, or are you focused on specific geographic areas?
For now, we've been specifically focused on New Jersey. We've got great partners here, and we've got a great pipeline of contacts and deals that we've been able to find, all off market. So for now, the focus is New Jersey, but there are not a lot of parks in New Jersey. I think we know almost every owner at this point. So we would definitely consider going out of state for the right sized park and the right market. I'm sure in the next year or two, it'll definitely be on the table.
Got it. Well, obviously, since you know almost all of the owners in New Jersey and been acquiring parks for the last 4 or 5 years, you established the infrastructure and have the process in place on acquisition, asset management, and so forth. How long would you say overall it took you to establish that process to have everything uh, automated to a degree?
Yeah, probably a good couple of years. Um, all of our properties prior to getting the mobile home park business were on the smaller side, so a bit of a learning curve. So I think
Give
if
us, I'm sorry, give us an example of how many pads are we talking about?
right now we have another acquisition that we should be closing on in about a month, and that'll put us at 6 parks and just over 200 pads.
Amazing. And the other parks were, when you say smaller, were they like 10 to 20 pads or 50 pads?
Uh, the generally between uh, 17 and 30 pads are kind of the smaller side. And then we have one larger park that's 80.
Wow, that's amazing. And for our audience, I don't know if everyone is familiar with mobile home parks. Can you talk a little bit, maybe explain what pads mean? Because both of us probably assume that everyone knows what it is.
Right.
Maybe explain that and talk a little bit about the difference between park owned versus tenant owned. Because again, you and I know, but I'm not sure that our audience knows about.
Absolutely. So, mobile home parks, the way that we prefer to manage our parks are to have all of our uh, parks as tenant-owned homes. So that means that the mobile home itself is not owned by us. What's underneath it, it's called the pad, and that's essentially the site where the mobile home can park, the lot, and we own that. So when we talk about number of pads, it's essentially the number of lots where you can place a mobile home in a park. Some parks prefer to own the homes and rent them out to much higher cash flow in business, but then you have to deal with repairs and issues of things breaking in the home, and you don't have as sticky of a tenant base. We have one of the beauties of the mobile home park is that when the tenants own their own home, they generally tend to stay for a long period of time. So average tenancy across the industry is like 14 or 15 years. We have some residents that have been in our parks for 30 plus years.
Wow.
So they're responsible for maintaining the home, and we're responsible for maintaining the roads and the infrastructure.
Amazing. Love it. Thank you for sharing. Fabio, when you talked about your bio, your track record, you said that you owned other asset classes and hospitality is also now a big part of your portfolio. Between the two asset classes, mobile home parks and hospitality, which one would you say is your preferred asset class and why?
It's tough to say which is preferred. They're very different. Going to visit the hospitality property is a much nicer experience than
Sure.
visiting the mobile home park. Being a few blocks from the beach and lots of great restaurants down there. But I love turning parks around. I love seeing the transformation from a park that's been neglected. I mean, I guess it's the same. The Surf Village was the same idea. Neglected property that you can just see the potential in it. Can be a really nice community. So asset class, I just like turnaround projects. I like taking something that has been neglected that doesn't look great to putting a lot of time and effort into it, and then having the vision for something that it can become that's a lot better. This serves the community a lot better.
100%. So you're not afraid of hard work and not just there to put a lipstick on a pig.
For sure.
Yeah, love it. And I, of course, have seen it in Bradley Village firsthand, how that transformation happened. And it's absolutely amazing. And glad that I can now enjoy it with my family as well. So that's really awesome. Thank you for that. Fabio, it's been a great interview. Very much appreciated. We always ask our interviewees two personal questions at the end. First one is, how can our audience reach out to you? Are you on social media, or are there any other ways they can find you if anyone wants to connect with you?
Yeah, happy to connect with anybody. I'm not very big on social media, so the best way to get in touch with me is just old school email. It's Fabio, Fabio at sppmgmt.com. The property management company I have with on the mobile home park side is called Summit Property Partners. Our website, summitpropertypartners.com. So that's the easiest way to get in touch with me, just like that.
Got it. Awesome. Thank you so much. And our last personal question that we ask everyone, how do you like to give back?
Lately, been giving back by just getting more involved with my parish. Belong to an amazing Catholic church here in Summit, New Jersey, and they do different events to help out for the needy in our community. And I've been teaching communion prep the last 2 years for my two sons that were going through it. So just trying to get more involved with my parish and help out in any way that I can.
That's amazing. Thank you for doing that. That's really awesome. Fabio, thank you again for this incredible interview. I'm sure our audience will appreciate it. And for anyone who wants to reach out, please feel free to reach out to Fabio, as he mentioned earlier. Thank you and have a great day. Bye.
Thanks, Lynn. It was a pleasure. Bye-bye.